Welcome to Seeds of Wisdom and Newshound News. Today we're diving into why America is heading towards a horrific financial crisis. For years I've been warning about the multiple factors that could trigger this economic downturn. The warning signs have been flashing red, but unfortunately, too many have chosen to ignore them. Let's break down the key points that should have everyone concerned. The United States is on a borrowing spree of epic proportions. We're racking up debt faster than ever before, both at the government level and in our own households. This addiction to debt is like a sugar rush. It feels good in the moment, but the crash is going to be brutal. There's no way to sustain this level of borrowing forever. Eventually, we'll face a harsh reality. Interest payments will become unbearable, leading to drastic measures. We're living in a dangerous illusion. For years, I've been a vocal critic of the Federal Reserve's reckless monetary policies. Their quantitative easing and near-zero interest rates are like throwing gasoline on the fire of inflation. They keep printing money like it grows on trees. The value of our dollar keeps eroding, and prices keep going up. The Fed's actions are creating a ticking time bomb for Americans. The US dollar has enjoyed its reign as the world's reserve currency, but those days may be numbered. We've run massive deficits, financed by other countries. But as we weaken our currency, those countries seek alternatives. BRICS nations are creating their own reserve currency. This should be a wake-up call. Losing reserve status would be severe for America. Chapter 4. Living in a Bubble. The Coming Crash in Financial Markets. Let's be honest, folks, we're living in a bubble. The stock market, the real estate market, the bond market, they're all massively inflated. Years of artificially low interest rates have fueled a speculative frenzy. But remember what I always say, trees don't grow to the sky. This bubble is going to burst, and when it does, it's going to be ugly. Chapter 5. Uncle Sam, the world's biggest borrower. The danger of foreign creditors. The United States is the world's largest debtor nation. We rely heavily on China and Japan to finance our deficits. They've lent us money at low rates, but for how long? As our economic credibility erodes, they may get cold feet. Reducing their exposure would worsen our financial problems. Chapter 6. The dollar's demise. Could a currency crisis be on the horizon? A dollar crisis could be closer than you think. If confidence in the greenback falters, we could see a mass exodus. This would cause its value to plummet, leading to hyperinflation. Imagine prices doubling or tripling overnight. Chapter 7. Spending ourselves into oblivion, the unsustainable cost of government programs. Let's talk about entitlements, Social Security, Medicare, Medicaid. These programs are essential for millions of Americans, but they're also unsustainable in their current form. As the baby boomer generation retires, the costs of these programs are going to skyrocket. The government is facing a demographic time bomb. They've made promises they can't keep, and something's got to give. We're either going to see massive cuts to these programs, crippling tax hikes, or more likely a combination of both. Chapter 8. The GDP Illusion. Why government projections are dangerously misleading. The government loves to tout its GDP growth numbers, but don't be fooled by the smoke and mirrors. Much of the so-called growth we've seen in recent years is nothing more than debt-fueled illusion. We're borrowing money to consume today, leaving future generations to deal with the consequences. This kind of growth is not sustainable. It's like building a house on a foundation of sand. Eventually, the tide will come in, and the whole thing will collapse. Chapter 9. The Widening Gap. How wealth inequality is fueling instability. The gap between the rich and the poor is widening at an alarming rate, and this growing disparity is a recipe for social unrest. While the wealthy have benefited from soaring asset prices, the average American has seen their purchasing power eroded by inflation and stagnant wages. This is not a sustainable situation. When a small percentage of the population controls the vast majority of the wealth, it creates resentment, division, and instability. It's a powder keg waiting to explode. The Fed's trap. Why raising interest rates could trigger a crisis. The Federal Reserve is caught between a rock and a hard place. They need to raise rates to combat inflation, but fear the economic impact. Their easy money policies created a bubble, and now they're afraid to prick it. The longer they wait, the worse it will be. There's no easy way out. Chapter 11. At the mercy of the world, the risks of global supply chains. We live in a globalized world, and America has become increasingly reliant on global supply chains. We import goods from all over the planet, and while this can be efficient in good times, it makes us incredibly vulnerable in times of crisis. What happens when those supply chains are disrupted? What happens when the cost of imports skyrockets due to a weakening dollar? We're going to see shortages, price spikes, and a decline in our standard of living. Chapter 12. Short-term thinking, long-term consequences, the perils of myopic economic policies. Our leaders have become addicted to short-term thinking. They're so focused on the next election cycle that they've completely abandoned any semblance of long-term economic planning. We need to stop kicking the can down the road and address the structural problems that are undermining our economic future. We need to reduce our debt, encourage savings, and invest in productive assets. We need to stop relying on consumer spending and debt to fuel our economy. It's time to get back to basics. Chapter 13. The decline of American industry. From manufacturing powerhouse to consumption-based economy, we've become a nation of consumers, not producers. We've outsourced our manufacturing base to other countries, and in the process, we've hollowed out our own economy. We're no longer making things, we're just buying them. This reliance on imports makes us vulnerable. We need to rebuild our manufacturing base and start producing more of what we consume. We need to become more self-sufficient and less reliant on other countries. Chapter 14. A New World Order. The rise of competitors and the decline of U.S. dominance. The United States is no longer the only game in town. Countries like China and Russia are challenging our economic and geopolitical dominance. They're tired of the dollar being the world's reserve currency, and they're actively working to create alternatives. We're witnessing a shift in the global balance of power, and the United States is no longer in the driver's seat. We need to wake up to this new reality and adapt accordingly. Chapter 15. Sound money, sound economy. The case for a return to the gold standard. Fiat currency is the root of our economic problems. The Federal Reserve's money printing leads to inflation and instability. We need sound money, a return to the gold standard. Gold can't be printed like fiat currency. A gold standard would impose discipline and prevent reckless policies. People are losing faith in our financial institutions, and for good reason. They've witnessed bailouts, scandals, and a system that seems rigged against them. This erosion of trust is a dangerous trend. When people lose faith in the system, they start to look for alternatives. They might pull their money out of banks, hoard cash, or invest in riskier assets. This can create a self-fulfilling prophecy, leading to bank runs and financial panic. The Federal Reserve has been pushing on a string for years. They keep injecting more money into the economy, but it's having less and less of an impact. Their monetary policies are becoming increasingly ineffective. We're reaching a point of diminishing returns. The Fed is running out of ammunition, and they're running out of time. When the next crisis hits, they're not going to have the tools to deal with it. Chapter 18. The corporate world is teeming with zombie companies, businesses that are only able to survive because of artificially low interest rates. They're kept alive by cheap debt, but they're not generating real profits. These zombie companies are a drag on the economy. They're misallocating resources and preventing healthy businesses from thriving. When interest rates eventually rise, these zombies are going to collapse, and the fallout will be significant. Chapter 19. I've just outlined a number of serious challenges facing the U.S. economy. These are not isolated incidents. They are interconnected symptoms of a much larger problem. We are on an unsustainable path, and a major correction is inevitable. The question is not if, but when. The warning signs are flashing red, but most people are choosing to ignore them. They're hoping for the best, but hope is not a strategy. Chapter 20. In times of economic uncertainty, it's more important than ever to protect your wealth. Traditional assets like stocks and bonds can be highly volatile, and their value can evaporate quickly during a crisis. That's why I've always been an advocate for gold. Gold is a safe haven asset. It has preserved wealth for centuries, and it tends to hold its value during periods of inflation and market turmoil. If you're looking for a way to protect your savings from the coming storm, gold should be an essential part of your portfolio. Outro. We are at a crossroads. The decisions we make today will determine the course of our economic future. We can continue down the path of reckless spending, debt accumulation, and monetary madness, but that road leads to ruin. Or we can choose a different path, a path of fiscal responsibility, sound money, and sustainable growth. The choice is ours. We can ignore the warning signs and hope for the best, or we can take action to protect ourselves and our families from the coming storm. The time to act is now. Don't miss the bus and subscribe.